just wondering, to what extent do you think this dynamic in Japan has to do with the fact that most of the government debt is held internally by their pension plans, and it's not held internationally like it is the case for the Fed, and we are seeing some of this play out in the yen as well. So it's not like this is happening without any consequences for Japan. I mean, they have their demographic issues. They've been having them for a while. And now they find themselves unable to raise rates because, first of all, they don't have any growth. Inflation hasn't really picked up, and they don't see an out, right? Is there an alternative to what they're doing?
I mean, Japan has about 10 big, broad, flashing signs that say, stay away. I mean, the debt burden in Japan has been for generations the highest, debt relative to GDP, the highest of anywhere. And yeah, there is not really any foreign institutional ownership of Japanese assets to the same extent that it happens in, say, the United States. We don't, for example, speak to the advisor community in the US and they start asking about JGBs. That's not a thing. Americans don't own JGBs, Japanese government bonds, for example. Now, Richard, what you pointed out, I'd have to pull up on the quote, but yen was at 144 last I saw. So forgive me if I'm a little bit off. Maybe you guys can enlighten me if it's not 144 right now, which is notably weak. So the way you might be engaging a Japan fund, and of course, this is, coming from the wisdom tree person who has got a lot of Japanese funds. To the extent that you were long Japanese stocks and you were not hedging the currency, then there's been large declines in those funds because the yen in the last 2 years has gone from 103 to 144. That is the yen collapsing. And I think the C word, collapse, is the apt term to describe a G7 nation witnessing its currency. Imagine if the Canadian dollar was at $1.03 and then we woke up in 2 years and it was 144. That's wild. That would be a wild move. Now just do it with the yen, 103 to 144, right? Or if sterling, 115 a year from now is like, 150 or 70. I mean, these are the types of moves, right?
Yeah,
so
it's been a 25% decline over the last year.
Yeah, and so there's a few ways to think about this. One, the bear case on Japanese equities is suddenly inflation percolates because think about it, you're buying US dollar goods, let's say, right? Or basically anybody else's goods because the yen has been the weakest in the last year or two. And so now as that stuff arrives in Japan, whoops, now Japan for the first time has inflation. Just at the time that maybe our thesis is that inflation is rolling over in the US. And now you have that quirky situation where why do I want to own Japanese stocks when now the BOJ, Bank of Japan, is giving us a hawkish surprise that is in no one's calculus? That could be the play out on that one. The other side of it is, wow, look how remarkably competitive it is to hire Japanese rather than hiring American. And I can't begin to express this. Now, look, Japanese have spent the last 15 or 20 years doing what a lot of others did, which is moving the industrial base to China. So it's not really like if it was 1980 or 1990 and the yen fell out of bed, and let's say, just to take the cliche of auto manufacturing, 100% of it is in. No, it's not. It's in Tennessee, right? It's in Ohio. So it's not like you get all of that benefit from the wage arbitrage, but you get a good chunk of it. And now I got to try to think of these numbers from the OECD, because since I did it, the yen has moved and gotten even weaker. But basically, the way it works is this. Let's say I think the year was 2012 when I did this. I got the chart somewhere out there on Twitter. In 2012, the average American was making like 45,000, and the average Japanese was making like 45,000, plus or minus 5. I think the Japanese were maybe 5,000 under. And then what happened is, and this is difficult for, I'm an American, so this is difficult for American. I think this is difficult for Canadians to conceptualize too. When I say wages went up, we always talk about wages stagnating. Wages did go up, just not a lot in the U.S. and Canada. Here's your 3% raise. Merry Christmas. Come on, right? But 3% every year for 10 years is real money. It's not keeping up with inflation, but whatever you were making back there at 45,000, it's now something like 75,000. Maybe went from 50 to 75 or whatever the number was, making 3 or 4% raises every year. So now the typical American's making 75K. This is as of 2021. But in Japan, I mean, you don't get a raise. This is the thing. We talk to people in tech. It's like, I'm making the exact same amount I was making in 1995, I think. It's like, that's what you hear. So wages hanging tight at this level for all these years, maybe 1% wage growth, who knows? But the yen 10 years ago was in the 70s. And now the yen's at 144, maybe it's 142, whatever it is. And so when I did this like 2 or 3 weeks ago, it was coming out to something like 27,000 US dollars for the average Japanese wage, and the American's making 75K. So it's threefold to hire American in a strong dollar regime than to hire Japanese. And you hear this type of thing. And I was talking to a guy and he said, why would I'm in a sleepy town in Spain. I can have PhDs for what I can hire bachelor's degrees back in Chicago. Well, it's the same thing. It's the same thing. If you need labor and you're willing to deal with, in many cases, when you need official documents done in Japan, it's like a stamp and ink in 2022 rather than e-signing on your computer. So it's Japan. But still, there's this massive wage arbitrage that has opened up, and nobody will talk to us about Japan. They don't want to touch it. It's like, why do I even own foreign securities? Because it's been underperforming for 15 years. It's like, yeah, that's why. Nobody wants to touch it.